Why would it do that? That's let's get this over here as well. Hi everybody, how's everyone doing? We are live. We are definitely 100% live. Let's get this show on the road. Okay, let's admit all. Hope everyone is well. Hope you're all okay. Hope you're doing well. Let's see. What did I do? That one? Have I added this one? Right. Okay. So I've added this one. Have I? Let's have a look. So that one should go there. We are currently short on gold. Doing well. Going well. Oh, just taking some profit off. It's just the sensible thing to do. Around 05. And we're looking for 02. Alright, good. Always around this time of day we get some movement, don't we? It's quite nice really, I have to say. Let's get the live session up so we've got that. Click there, copy the link, get on here, click here. And here and done. Okay, we are live. How is everybody? Where is everybody today? I thought you guys might be around. I thought you might be wanting to learn. Hey Dan, how you doing? Jay? All right, all good. Thank you. Are you logged into YouTube and Zoom both together? Oh, just a Zoom, yeah. So okay, so we've got a Daniel and a Danny. Excellent. Good to know.
What's up, man? How you doing?
All right. We're going to just do a quick. We're going to do a rundown of a few pairs. Gold as well. But gold's already making a fantastic move. So we're already doing some bits on that, which is nice. Let's get that over there. Let's move that across to there. Done. Okay, and then we want to get into there. Just allow people to start logging in. Let's everyone. Good, we are. That's it, done. Right, that's it. Fantastic. So off the back of a bank holiday, an American holiday, we are seeing some profit taking, seeing some downward movement. Makes sense. Gold, beautiful, nice sell off on the stock markets as well. That's just wow. Look at that. Everything's just in some decent free fall price action. So money's made really today. Money should have been made today by now, I think. What do you guys reckon? How are you guys getting on? Shouldn't have been trading yesterday. Perfect, done. So yesterday everything just messed around. Everything was just going to be focused on chopping you around, chopping you up rather. So what have we got? So we've got a pound dollar and the euro pound. They correlate. Pound yen, euro dollar, dollar Swiss. They correlate. Let's see, what other goodies do we have here? Let's Aussie dollar, New Zealand dollar. I think we should look at those as well. So Aussie dollar. There, put that one on. Anything else that you guys want to look at? Anything else that you want us to look at? Any other positions? You've not taken any trades yet. Okay, that's cool. No worries. Wow. Okay. Nice. Nice. Everyone's doing well, it seems. There is no need for these live sessions. It seems everyone is just smashing in profit after profit after profit. That's what we like to see. Fantastic. Oh, be quiet with your copper. Money made on gold. Did you get it? Yeah, I was trying to short that yesterday and I thought, you know what? Not even going to try and bother. It went up and I thought, let's just leave it. It's bank holiday. Wait till tomorrow. And yeah, we can have a look at that. Gold, we've done the analysis for it since last week. Higher time frame analysis tells you that it's bearish, and yeah, let's actually make a start on looking at yeah, let's look at gold first. Let me just move this one out of the way, bear with me. Let's get this on here and we'll skim through. We're going to do some scanning, quick scan of the market. So if you guys want to look at anything else, including Bitcoin as well, that's the last one. Let's put Bitcoin on here because Bitcoin's at some interesting levels and it's up there testing that 50,000, really nice level. Guess I'm going to leave that there. It's at a key area as well. So yeah, let's have a look at gold. So very quickly, gold, and let's move. Actually, you know what? Because I've got my charts up already on preset on pound dollar, let's look at pound dollar first, and then we'll go to gold in a moment. Pound dollar, because pound dollar is at an interesting level as well, and we are extending up to $1.40. So we're nearly there. Let's have a look at it on a daily. So daily chart showing divergence, a lot of divergence. We're seeing it on the 4-hour chart, and we're seeing divergence over extended price action also on the 1 hour as well. Gold is just have to know the levels on gold and pay attention to when they're going to make the move to them. And what you find is that with gold, it will move and move fast to those levels. So if you have them plotted on your chart and you know where they are, it makes the job easier. It's just a case of waiting. But generally around this time, coming off the back of a bank holiday as well in America, you can see where we're at with everything, and you can see what time it is as well. So this is the time when you tend to see some action around 12 o'clock to 1 o'clock, which is about 12 o'clock to 1 o'clock London time, which is also the handover or when you have the American sessions starting to cross over. So that's about 7 a.m. to 8 a.m. New York time. You tend to see some movement on gold, some volume come in on gold. So that it's always worth paying close attention to what gold is up to around this time of day. And sure enough, you'd catch some easy money, quick money, if you were just waiting patiently. But we'll explore that in a second. So pound dollar, I'm interested in pound dollar because pound dollar is actually doing what we've wanted it to do. It's going up to the levels that we've been forecasting for the last 2-3 months, really. Very close to that 140. These are the pre-Brexit levels that we're talking about. So now that Brexit has been discussed and digested and resolved to a certain extent after 4 long, slow, arduous years, we are now seeing the pound pairs generally being bullish and able to just get on with it and make some bullish movement, without much restriction. So it's enjoying a bit of a revival after many years of being suppressed, and it makes sense. That's price action for you, isn't it? Things go down, they go up. That's it. You look at a life cycle of a product, it's down and up, down and up, down and up over many years. So now we're in an uptrend. So every time we want to take any shorts on this, we generally look for overextended price action using our divergence strategy. And the divergence strategy is the only way that you're able to get in and reverse this trade. Right, sorry about that. It's because otherwise you're going to have issues where people are generally trying to call tops and bottoms, and they haven't really got the levels that they know are going to be the levels that are the correct levels. So they just take a guess, get in, and then the price continues to move against them, and then they realise that they just jumped in prematurely, impatiently, and they didn't really fully appreciate key levels because they didn't have them on their charts, because they don't understand them. So fib extensions are the way to go when you want to look for extended price action. So what are fib extensions? So look here, so previous high, clearly nothing to the left of it, nothing to the right of it, and then it starts to extend. So then it's a case of going up into somewhat uncharted territory. So what's up here? Well, we have these extensions, so then you know that we're going to have pullback. So we once we touched it at the start of January on the pound dollar, we dropped back 200 pip move, nice, off 137, nice round number, with divergence. Divergence is a lack of volume, so volume's going down while the price is continually being pumped up, and you think, well, that's not sustainable, because there's not going to be enough volume, not enough orders, not enough money being pumped in to buy at the top here. So the volume's starting to go down, it decreases, and so you'll see it drop eventually. And that's the basic principle of trading, isn't it? Where you are buying low and selling high. So, understand that. Pound Aussie, we can have a look at that after at the near the end. Let's move on anyway. I'm waiting for pound dollar to come up here to top out to hit my key level of 140 area. Although we do have divergence and we are seeing a bit of profit taking now. We've been up to about 139.50 area. Pound likes a 50 number, so there's no trade here for me. It's too risky to be taking shorts before 140. I still feel that we could see one more pump up at least, so any pullbacks may be shallow and short-lived before seeing further upside push, because it's very bullish. However, if we do, with the aid of divergence, see a pullback to, I was talking about this level yesterday on the pound dollar, 138.66. Previous structure, this is a 4-hour time frame. If I see a bit of a pullback here down to a previous structure, so around 138.70, that's about 70 pip pullback. Then maybe down here there might be another opportunity to take a long on pound dollar. So it would, previous structure somewhere down here. You can appreciate there's going to be some orders down here, looking for some buys further upside. So that that's where we're at the moment. So sometimes even with our divergent strategy, it might be a safer bet sometimes not to necessarily jump on it, depending where we're at with price. But it might just be a case of using it as a monitor to track the price. So I want it to get down here. I'd like it to get here, but there's not much scope for me, because unless I was up during the Asian session shorting at the top, I can't justify jumping in down here and putting a 50 pip stop on in the hope I get 30 pips out of it. There's just not enough risk to reward on this. So for me, it's a case of just waiting, allow it to drop, and if it gets down here, there might be a trade long on this move. So that that's what we are ultimately looking for. And I can see 139.80 area would have been a nice area. Had it touched there, might have seen a bit more of a conviction to short it, because we are seeing divergence. But we'll wait and see. It's not I'm not in anything. The only thing I took was gold just now with this 764 strategy. I shorted gold twice actually, and took some money, two nice bits off that, down to about 05 actually. And I just exited at 05 area because I have a bit of an extension level on the 1 hour, which we can now go and have a look at. So I've got divergence across the pound pairs. I've got it on the 4 hour, looks pretty decent. I've got multiple levels, multiple fib clusters, fib extensions. I'm using the last 2 swing highs. So we went up, we pulled back, and then we made a new high, and then we pulled back. Didn't quite test that previous one, so that previous one's still valid for me. And then we pushed up again. So you can show it's a bullish intention, very bullish, not pulled back properly. Now we're extended. We may well drop. Again, if we do drop, it may well present another buying opportunity. So that's my take on the pound. Not really anywhere with the price action being the way it is like this. Not really a trade set up for me. There's nothing there that I really like the look of. Let's move on to gold very, very quickly. I want to do analysis across the board, so to give you some ideas of what to look for over the next few days and the coming week, because there's certainly going to be a lot of traders coming in, especially off the back of the holiday, maybe feeling somewhat refreshed. Anyway, right, so gold is, let's have a look at gold, following on from the 764 strategy from last week where we topped out on that previous move, that previous range. We went up, didn't we? Hit the 764. Our long target, we got in long at 1842 up to 1852. That was a nice move. Topped out at 1855, was it? Yeah, 1855. We've got a 764 at 1854. So pretty decent from there. We just had a very nice bearish, like an inside candle really, somewhat cross between an inside and an engulfing candle, because it didn't take out the highs, so classed as an inside, but then it did stretch. This is a daily, and it was just one big massive sell-off that took out the previous candle, didn't it? So it really did give you a strong indication as to what its intentions were, and we've just been trickling down, and it's been quite a volatile ride. It's chopped down, wicked up and down, had this had this candle the following day, which was like a doji. Just, yeah, a lot of chop. So down, take profit, bounces back up, and then get in again and again. Yesterday was just a bit of a non-event, but today we had the move up, rejected, retesting yesterday's highs, and then we've gone down with a bit more conviction. Now, why people are asking, like, why is gold doing that? Well, if we strip it all back and look at the monthly, January was bearish. February has been bearish. Only in that it's bearish to retest the previous low of last month. So it's powerful because we're talking monthly candles as opposed to 1 minute or 5 minute. So it's relevant. This is why we do top-down analysis. At the start of a week, you look at the start of the week. You look at your weekly. Start of the month, look at the monthly. Start of a month, end of a month, look at the monthly. End of the week, look at the weekly. It just makes sense. You always have to do that. And if you forget what it looks like on the week, or it's moved quite substantially in a few days, go back to your week and do your top down again and have another look, and just to remind yourself. So it was bearish. There was no two ways about it. It was a case of just goes up, short it, goes up, short it. That's it. Try and get in short. But again, those that are less experienced, they try and call the bottoms on this, and they're trying to get in and take in longs. A counter trend move to a clear bearish bias. Clearly there was bearish sentiment, but I saw a few guys trying to take longs, tuck in, let's just get in under here and try and buy it up, and then bang, it hits them, and they're like, oh, why is it sold off? It's like, so they shouldn't be trading. But anyway, there you go. They'll learn, maybe. So yeah, there we go, 618, back to the 618. So I had 2 downside targets, 1812 on gold, that's been hit. My next target is 1802. It's spiked down and rejected quite quickly. So will it go back down for another retest? Possibly, but this is where it starts to get a little bit messy. So if you miss that first move, you just have to, I guess, maybe wait patiently to see if it's going to just crash on back down. It's quite possible, and we do at the end of the day have that target. And just as I'm telling you, it is just having another stab to the downside. So anyway, that's my take on gold. It's already moved for me, and had it not moved or was about to move, I could have then said to you, you could have jumped on it with me and shorted it. But just before I started the live session, it started dropping. So I shorted it. Well, I shorted it a little bit earlier, and then I shorted it again just now. But yeah, the target's still valid, 1802. It might drag its heels all day today, and really it's worth waiting an hour just to see possibly what will happen with the US traders. Maybe, I don't know. Up to you guys. But that's my take on it. It's a shame really, because it's just done a 40 pip spike on a 1 minute candle. That's just mental. But yeah, that is, like you guys said, it can be quite volatile, pretty volatile. Yeah, you're learning that gold is volatile. Yeah. Okay, so let's go back up to the daily, because let's look at a bigger picture on gold. Don't want to rule out that that's the end of the game in terms of the downside, but surely we are, just setting up for a potential bounce to the upside if it's going to touch 1800, round number, 1801, 1802 area, and bounce off there, maybe have another move up like this perhaps, and then maybe if it does go up, we could then see it curl back over again and retest the lows. So we have 1765 and 1785 respectively, 200 pips between them, as potential downside targets. Okay, so yeah, it's to London fix. What do you mean? Do you ever pay attention to London fix? What do you mean London fix? Let's go higher still. Yeah, beautiful move. Wow, look at that volume. If you're taking an FTMO challenge, you could have been done for the day. Just shorting, could have been done for the challenge, taking a short on gold. Oh, that's a good move. Good move. I'm a little bit disappointed for you guys. I did want to take something for you. It just, unfortunately, it moved before we started the session. I would have called it short. You could have jumped on this short with gold, with me on gold. Yeah, Blue Seal. What do you mean by paying attention to London fix? Give an edge to London close traders. Again, what do you mean London close? Did you scalp that drop, did you? Yeah, that's good. That's really, really good. Part of me's having an episode of FOMO, fear of missing out, of course. Be like, why didn't I get more off that? That's always a trader's thinking. So don't think you're alone with that. Whoever trades will always have those same emotions and feelings and think, oh, I should have got on there again, or should have taken some more off that gold move just now if you were in gold. Anyway, let's move on. So gold is doing its thing. Is it going to extend down to 02 and 1800? Yeah, why not? I mean, it's very close to doing that now. Nice clean chart off the 764 strategy in play. So 764 up here for 55 down to 1800 for what's that, about 550 pip move from a 764 previous swing high of the last range down to 764 of this current range. There is method to the madness. Just have to pay attention to seeing it. But I can help you with that, to understand price action and how it moves, and there is purpose. It's not just random coincidence. Focus on less. That's actually very true. Yes, very, very true. Pick one or two or three pairs at best. So like with pound dollar, let's move to euro pound, because euro pound is directly correlated with the pound dollar. So if I was trading pound dollar, which I do, it's one of my favourite pairs to trade, it's always on my watch list, I will look at the euro pound for correlation. So euro pound to go up when pound dollar goes down, but I don't trade euro pound. I don't double up my risk on it. I just use it for just purely for that. You're missing some great price action. No, I mean I've made my money on the move already on the pound on gold. So yeah, if I hadn't taken anything, well, it wouldn't have been a case. I would have taken something. I definitely would have taken something. Just to show you that I took a chunk off this move. This is my 4-hour chart, and this is my 764 that we're coming down to. But the reason I took some off at 05 was because this range that we've been in, when you look at it on the hour time frame, we've been consolidating. It's been quite choppy. So I took the high and the low off that, and just focused on that, which was quite nice because again I noticed it was a perfect 200 pip range from 1810 lows to 1830 highs from Friday. That was on Friday. So now we extended. We broke 1810, and we've extended to 1805. So another 50 pips spike down. So and we even went back up. So it for me that's made a satisfactory bit of price action for me to capitalise and bag some pips. It's a never-ending buffet. Don't forget that, guys. It's a never-ending buffet. You miss something. It's like waiting for a bus. You miss the first one. There'll be another along the way shortly. Don't worry about it. Of course, like I say, you're going to have these emotions. You're going to think, I missed out there. Never mind. Hopefully, you won't lose any sleep over it. So yeah, let's quickly move to the euro pound because I want to show the correlations because it's very important. People have been asking me, and people have been talking about correlations over the last few weeks. So I thought what we would do today is a quick scan of the markets and show you the correlated pairs, so you can see what to look at for further added confirmations when you're trading. So further correlations, which can help you get into a trade and justify the trade. And so, what if you want to go short? Excuse me. If you want to go short on the pound dollar, then you'd be looking for this kind of movement. On euro pound, you'd be looking for a bounce back up. So that's euro pound. And one thing I've noticed though that I really wanted to bring your attention to was the bearish nature of the euro pound and where it's coming back down to retest. So it's very, very close. It does move less in terms of daily pips. So the average daily range is not as much as pound dollar for argument's sake. But here we've had a pullback, so expect it to go back down one more time, which tells me that we have at least potential for for maybe one more pump up on the pounds. So the levels on the pound aren't quite there yet. I do need this to get down another sort of 30 pips or so, down to about 138.70, which I've already shared. And don't worry, I've recorded this session, so you'll be able to catch up with this after. But it's really important right now. We're nearly there. So 87.30, 86.70. That's about 70 pips. No, 60 pips. Sorry. It's about 60 pips left on it. So a 60 pip trickle down. I don't want to short it from here. It's quite a slow burner, but I wanted to draw your attention to that. Let's have a quick look at the euro dollar as well, very, very quickly. At the end, then we can go through questions. No, I wouldn't take anything off gold trying to go long on it. It hasn't actually finished the downside as far as I'm concerned, or for me at least. It's not done enough to the downside. I want it to test 1800, so I think it still has legs to go. It's very bearish on a daily and on a 4 hour, so there's absolutely no way whatsoever I'm taking any longs counter trend move on gold. Now, to understand the 764 strategy, the idea of that is, say we're in a downtrend on gold and it makes its first little leg down. So say it went down to about, 1818 or something, 1820, and then it retraced up. Now I'd be looking at that retracement to the 76.4. So retrace 76% of that last move down, because things don't move in a straight line. So it moves down a bit, say 100 pips, then it retraces 70 or so pips back up to around that 764. That's the point I get in. That's how we use the 76.4. to sell off in this case at least, and then I'd be looking to short it, and that's the start of a, that's a confirmation because it's been allowed to retrace up. It fails, and so that's telling you, confirming that it's actually bearish, and it's like, okay, so we don't want to go up, we don't want to retest that high. Okay, we've tried to retest the high, but we're failing, so down we go, and that gives you that confluence, that confirmation. Say, right, yes, good, let's pile in, let's take it short, and the stop loss is not going to be very big because your stop loss is going to be just positioned slightly above the 76.4 fib. And if you're getting in around there, your stop loss and your drawdown is going to be very small. And that's how we get the sniper entries, because it's about knowing where the levels are to get in. So you can time your entries. A bit of patience, a bit of structure, a bit of planning. And you're there and you're done. It's fantastic. Okay, nearly done on gold. Was 2 pips from hitting my TP and dropped. My account doubled on that play. That's EU. Okay. Could be a quick 50 pips to 17.95. Yeah, could be a lot of things. It's already moved. It's already moved 250 pips. You always want things to go infinity and beyond, don't you? That's hilarious. But hey, whatever. If you haven't made enough money so far from trading shorting gold, then that's just poor risk management, isn't it? Poor risk management, because if at the end of the day you're not happy with what you've made. Anyway, euro dollar divergence, we've played out the divergence to the downside, so I'm now just waiting. We've had the bounce, and if you look at it on a 4-hour chart as well, we retrace 50% of the last swing. So for me, this is we're seeing a dollar move right now, a bit of dollar strength coming in. So you're seeing a bit of a bearish move across all the dollar pairs: Aussie dollar, pound dollar, euro dollar. Again, still very much in a range though. Don't think that it's bearish, because it's not. It's just a correction. I mean, be aware of that, because some people say, "Oh yeah, look, it's going down," so you might think, "Oh, quick, let's short it." And it's like your behaviour there is could be something like a puppy chasing a ball being chucked, and you know what I mean. You're not really planning your trade. You're not really thinking things through. And so you just see a move and it's impulsive, and your actions are reactive to that impulsive move. That's no way to trade. And if you do that, and I'm sure a lot of people do that, well, I know for a fact a lot of people do that, it's time that you stop doing that and say, okay, I need to have a bit more thinking with how we do things, a bit more structure, plan ahead. So this is why we do these analysis sessions, and this is why we do top-down analysis. So you already know. So like with gold, I already knew where my levels were since Friday. So 2-3 days later, we had to wait an extra day because obviously the holiday. No brainer. It's moved down in my direction. I'm confident enough to jump on that and short it, take some profit, go in a little harder if I want. It's done. It was because I'd already thought ahead, planned it. It's very important that you do that. You're going to see this kind of price action all the time. So where's this going down to? I've no idea how low this is going to actually get to. Is it going to get back down to that 120, 120.20? I mean, we're sideways and it's quite bullish. So these could just be little corrections. The one to look at is going to obviously be the US dollar index. Oh, let's get on here. Let's pull up the euro dollar just so you can understand that in a little bit more detail, and then we can switch over to the dollar index as well. So we came down to previous structure, 50% as well. That was the euro dollar. You can see it's still very bullish. We may well see another N-shaped kind of correction to the downside, maybe retest that $1.20 area, possible. It remains to be seen what the US traders are going to do. It seems that the US traders have come in now and provided that extra volume, and as we've been sat here over the last sort of 20 minutes, half an hour or so, we've seen some fantastic price action. I see indices moving. They've given some moves to the downside, some profit taking. Gold dropped, profit taking. We're seeing some corrective moves again now across dollar related pairs, some profit taking. if you've caught some, made some, consider stopping and finishing for the day, or just sitting back in your chair, relaxing and watching the show, and just see how everything now plays out. You know, that's the other thing. Learn when to slam on the brakes. So yeah, euro dollar. It's a bit of a. It's just not doing anything at the moment. It's consolidating. You know, for a few days now. This is a daily chart. We've had the move down. We've had the correction. We've had the bounce. Now it's just sideways. So for me, that's doing nothing. I have to wait for euro dollar to make its next move. So is it going to go up or down? Is it going to go down here? Let's put these fibs on here. Let's see where we're at. Are we at roughly a 50% retracement? Midpoint. Have a quick look. Euro dollar. Get your fibs. These are my fibs. Have a look at these fib levels. If you want to make note, take note. I use a 76.4, not 78.6. If you add 23.6, which incidentally I do not use, I want to have that space for it price to move. But if you add 23.6 and 76.4 equals 100%. Same if you add a 38.2 and a 61.8 equals 100%. Okay, so we've gone up. We've just bounced roughly off that 50% area. I still feel there's further upside potential. I'd like this to get up to 122.50 area, at least to that 764, to grind up. It might just go down a bit, up a bit, down a bit, but then yeah, bullish ultimately still, isn't it? So you're going to go with a trend. Trend's your friend. Let's see it get up to that 76.4. Right, let's move on to what's the correlated pair? Well, dollar Swiss is the directly correlated pair to euro dollar. What's that doing? Again, I don't trade dollar Swiss. I try not to trade euro dollar as well these days. But if I do out of the two, I will trade euro dollar. But I don't trade dollar Swiss, but I will use it for reference. Yeah, so that was the target. That was the first major decent downside target on gold. That's it. That's where we're at. It's not sitting on the 764, just to be clear. It's now testing the 76.4. Sitting would mean that it would have to sit here for the next, I don't know, half an hour, 2 hours, consolidate at this level, just sit and rest. Just so you're clear on that, in case your mindset is, oh, right, sitting there, let's buy it. And it's like, well, it's still going, you know, hasn't finished the move yet. Give it a chance, just in case. Because what do you think? Euro pound. Euro pound is not bullish. Euro pound is directly correlated with the pound dollar. So short term play, yeah, I've done it. You have to go back through the live session now and have a little look, because I did explain it, and you'll see it at the beginning. I've given the levels on that. I want to whiz through. Yeah, still bearish. You've got to go down and retest the previous low, and I have highlighted it on my chart as well. So dollar Swiss. Let's get back on dollar Swiss. This is so dollar related moves. You've seen some dollar buying. Okay, that's similar to the euro dollar. Bit of consolidation, spike down almost to the 618 and then back to the 50. I'd like to see this drop down and for euro dollar to go up. Euro dollar to go up, dollar Swiss to go down. Euro pound to go down, pound dollar to go back up. When, I don't know. Actually, I'm going to skip the Aussie pairs and the New Zealand pairs, because they are dollar related and they are moving in line with the dollar moves right now. So we are seeing some lovely corrective moves as we speak. There's some profit taking, some money being made. Let's have a look at Bitcoin. Bitcoin on the weekly. Whoever's in the Zoom call, I'm going to reboot the Zoom call. Okay. I am going to reboot the Zoom call in about a minute or so. Just give it a chance. I haven't read any of that. I hope it continues. Yeah. Yeah, I don't think so. We're tapping out of 50,000 on Bitcoin. Now, if we can allow this week to play out, I'd love to see. In fact, I'd love to see Bitcoin drop from here, from 50, what sort of a drop. I'd like to see it drop all the way back down to 42,000 with divergence. Volume is less, divergence is less. So 42,000 drops, I'd be interested in. Then some longs again. This is the dollar index. We're seeing some dollar manipulation, bit of bullish price action. Makes sense. Let's see how many days this lasts for. Allow price to start developing. You know, we've had like an hour's worth of just some buying and selling. It's not enough to say, right, it's a change of a trend or anything really. It's all just perceived as a correction for the moment. So allow things to develop. Look for more confluences. Sit on your hands more. Analyze. And if you're not sure, send me a message. You know, send it to my Telegram at ALX_TYW. Right, good. Let me just quickly reboot my Zoom, and then we can open up for questions. So yeah, any questions? You want to ask your questions again in the live in the YouTube? Any questions that you want to ask? By all means, please ask. I think that's done. Pull that there. There we go. Yeah, so we'll do like 10-20 minutes of questions, and then yeah, and then that'll be it. Well, no, yeah, just in case. I mean, it could just be that your writing and your wording is, you know, your wording was just, yeah. Zoom calls back on. Zoom is back on. Like I said, it was just, I did say I needed to reboot it. I've rebooted it now. The Zoom is back on. But please, if you guys have any questions, or you're in any trades right now, or you're thinking of taking some trades, or you've taken some trades, yeah, okay. So you asked some questions, Alex. I wanted to ask you if you could maybe go a little bit in depth on the EMA exponential moving averages. Yeah, of course. Let's use the dollar. Let's use the dollar index for that quickly. So dollar index. We have my EMAs that I use first off. And I do have a video on my YouTube for the EMAs. I'm sure I do. Explaining what they are, which ones I use. Let's have a look at it on. Well, let's have a look at it on any of them. Let's pull up here. So I have an 8-period moving average, which helps stay in the trend. That's just a trend, short-term trend moving average. So 8-period moving average, which is kind of cool. Then we have the 21 period moving average. Then we have the 50 period moving average and the 200 period moving average. So the 50 and the 200 are a little more, well, they are for longer term movement. But the 21 and the 8, or the 8 period and the 21 period, they are short term, and obviously you look for crossovers. But then when everything is nicely positioned like this, you know, it's bullish, 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 you look for the separation. So you can see that the 8 period to the 21 period, there is what we call a mass separation. So they're really wide apart, aren't they? You know that they're like those Bollinger Bands. They're like the elastic bands. It will come back. So it's gone. You know, they've extended nicely. They've got to come back, snap back, which ties in as an added confluence, because I'm saying that we've extended and we see divergence on Bitcoin, and you know it's tapped out 50,000. I was looking for 50,000. It's hit 50,000. Looking for it to go short now and to drop all the way back down, ideally down to about 42. And so by that time, maybe we'll have our 21 EMA will come up and test that 42, which might be a nice little free money trade, nice bounce off there to go long. So you'll find that all the indicators start to marry up. So first off, you'd want to look, this is a daily chart, so first off you'd want to look for the break of the daily 8 EMA. You know, not just a stab down with the wick, but you need the body to go down through it, and then the body to close. And not just go close a little bit. Ideally, you want it to close a massive portion, a massive percentage of that body. You want to see it close below the EMA to start seeing some, you know, reversal, signs of reversal. Down here you can see there's a lot of indecision, and so you've got the 8 EMA crossing over with the 21 EMA, and you've got price going up and down, undecided, up a bit, down a bit. These are called what we call croc jaws, because you just have this price action where price is mixed in between all of these EMAs. They're just sitting in between. It's indecision, isn't it? If you took them off and just focused on the 50, you've got this 50 EMA here just helping to cushion this move down, corrective move that we had, and that first impulsive move drive up on Bitcoin. And the reason I'm saying Bitcoin, any other instrument, they're all the same. You can trade absolutely anything with any of these strategies, any of this analysis, anything. Just obviously there are certain variables, certain things that differ. So you know that with Bitcoin, your stop loss has got to be a little bit wider, because your spread's probably a little bit wider than, say, if you were trading the Aussie dollar. Oh yeah, so Carl, so you what did you do? You took something on New Zealand yen. Do you ever trade just support and resistance? Okay, so everything I've just shared, they're all different forms of support and resistance, so that pretty much is all we trade, support and resistance. I think I know what you mean though. You're probably asking regarding support and resistance, like the last high and the last low. Is that what you mean? Because otherwise support and resistance comes in many forms, and so what I've done is I've split them into two categories. We have our primary support and resistance tool. Our primary form of resistance is are the fibs, Fibonacci levels, and then everything else is secondary. So you know, double tops, double bottoms, maybe head and shoulders formations, different patterns, so wedges or whatever you're looking at. You know, indicators showing divergence, EMAs. Did I say trend lines? Yeah. Pivot points. You know, there's all different types. That's the word. Different types of support and resistance, but they are all support and resistance. So again, just be clear on that. When you're talking about support and resistance, if you would care to elaborate and just expand upon that and tell me what you think support and resistance is, or what type, and say to me, you know, what type of support and resistance are you talking about, and then we can talk about them. We can add them into the mix, but recognise that support and resistance is everything I've just explained. It just doesn't come in one form. It has many disguises. It has many forms. And so what you do is you go through these different forms, and you, through years of backtesting, you try and work out and establish which one's more precise, which one's more powerful. And what I came to the conclusion in seeing is that the fib levels are more precise and better than, say, supply and demand zones or order blocks supply and demand zones. You know, these what did I do it here on, or the euro? I did it on the euro. Oh yeah, I did it on the pound. Let's have a look at that pound. I did it here, didn't I? This, like your supply and demand zone, previous structure coming down. That's your support, primary support that we'd like to see price short down to. It's trying to have a go. If it gets down there, I'd like to look for a long. Start looking for potential longs on pound. And then what I would do is I'd take my other form of support and resistance, which is my fibs. I'll take this high, this low, up to this high. Let's pull these ones back a minute. Let's keep them on the chart. Let's just pull them back so they're not overlapping, so we don't focus too much on them. And let's say, okay, where's the first fib retracement level? Can't really see that, can we? Let's move the numbers so you can all see. This is pound dollar. Again, same principles. What I'm showing here is applied to absolutely anything that you want to trade. They all move the same. Everything is traded in the same way, in the same manner. There we go. Let's move it. There we go. So 138.84. So it might get stuck around that the low 138.80 area. What have we been down to so far? Pound. Yeah, that might be it. You know, that might be the end of the move to the downside because it's still very bullish. Okay. What else did you guys want to look at? Any more questions? Basically, you've got you have my Telegram username. Just if you have any questions about any charts, anything at all that you're looking at, feel free to send it to me. Just to say, look, here you go. What do you think to this chart? What do you think to this analysis? Don't just chuck me a chart, and don't send me 5-minute charts or 15-minute charts. All the strategies that I do and everything that we do, we're looking at higher time frames, so it's 1 hour minimum. So your top-down analysis is monthly, weekly, daily, 4 hour, 1 hour. Use the 1, the 4, and the daily for day trading, intraday trading. Jay, so funny. If you work in a bank for a hedge fund, then you don't use anything, let alone fibs. You leave that to the analysts, and the analysts do look at things like fibs. But again, it's all very loose and subjective. It's not the same, is it? They don't trade like that. This is all for the retail side of the business. When they're playing with hundreds of millions of dollars, they're literally buy here, sell here, and that's what they do. That's it. That's all we ever say. There's some excellent videos actually. I'm going to send you a YouTube video of a couple of ex Goldman Sachs traders that started back in sort of early 2000, and they were talking about when they were being short squeezed. And they were offside, like the drawdown was something like $500 million, and it was really, really like interesting because they were talking about emotion, and they were talking about the psychology of trading, and in the sense that, you know, when things are not going how you would want them to go, how do you feel? That you can either start panicking or you can start using your experience and start saying, okay, right, well, I've put the right amount of risk on. This is my plan. This is my strategy. It's not working. Okay, move on to the next. Move on to the next trade. Doesn't work. Move on to the next one. That works. Make money. Great. Move on to the next one. It's an emotionless process. It's very difficult to do that, and that's the part that seems to mess everyone up. And that's the biggest aspect to anyone's trading. Doesn't matter whether you're a retail trader or institutional. That's the part that you need to do your work on, self-development, so that when you do put a position on, you're comfortable with allowing it to run, and you're saying that you have enough integrity in yourself and self-belief that you trust your judgment, and you know you're not letting yourself down in that respect, and you're saying, okay, I've put my target on, it's realistic, and I'm going to hold, and I'm not going to bail, and so this is what these guys did. But obviously they were trading with huge amounts of money, but then on the flip side is, it's not, you know, what's the worst that will happen for them? They'll lose their job. It's not their money. They're not going to go bankrupt. They're not going to be subject to, I don't know, trying to find money to pay the bills or pay for their mortgage or lose their house, or, you know what I mean? It's not detrimental in that respect. So for them, it was very much a game. Doesn't matter how you look at it. It was a game, and having those experiences are pretty awesome. You know, you can look at them and their egos are huge, as well as their bellies, because, you know, they've made enough money not to care about anything much beyond what they've done, you know, in trading. So each to their own. It's yeah. What style of trader am I? Yeah, I border scalping. You know, I don't want to be in the markets for long periods of time. So what I've done is I've put in place a T1 and a T2. my T1 will allow me to take some profit off the table. So if my risk is 0.5%, also the risk is really important. So over the years, I've gone less and less and less, and I'm really comfortable now. So if I'm in a losing trade, I'm annoyed, I'm pissed off, it's emotion, but I'm not going to lose any sleep over it because my risk is not going to be detrimental to my account. 0.5% is not going to rock the boat, is it really? So it's important that you do that, and my T1 is there to allow me to take some profit off the table, because I keep seeing traders that love to hold to infinity and beyond, and one guy last week was telling me that he was up 4% and he watched it go all the way back to his break even. The only thing he did was moved his stop to break even. I think, to be fair, he probably took some off around 1% when he saw it dropping all the way back down, but still to be up 4%. And if you're doing a prop firm challenge and your aim is you have to try and achieve 10%, and 4%'s on the table and you don't take it, it's because you haven't got the right plan, you haven't got an exit strategy, you don't. So understand what style of trader you are. And for me, if that was the case, I make sure that I'd take some off and try and leave something on to run, because we never know if it's actually truly going to run and run and run. How long do I typically hold a trade for? Well, if we get in like now with gold, we got in and we were in and we were out and we were done. So it was all within an hour, really, which was nice. It means now my day's done. I don't need to do anything else today, and I'm not either. I'm not going to do anything else today at all. There's nothing for me to do, and everything has just played out all around us. We've had some fantastic movements, big corrective moves on dollar pairs. As I say, everything's just been kicking off around us right now. It was very quiet yesterday, and it's made up for it today, because yesterday was a holiday in the US and today everyone's back. Although we still have, I think a lot of the Chinese as well, Chinese New Year, a lot of traders in Asia are coming back off those holidays. A lot of them have had almost a week off as well, so a lot of them will be returning between today and tomorrow, even though officially they say that they're still on holiday. There's still people working from home, a lot of lockdown traders, so you can see it's quite busy today. Today could be the day that you make your money. So we say that there are 5 days in a week, 5 chances to trade and make money, and we say that on average it's about 20% of the time that we see some movement, that we see some proper trending moves, decent volatility, volume. Like if you look at gold, So today, to put that into context, 20%, 1/5, 5 days a week, or one day in a week. I keep saying that, I keep repeating that statement. It's so true. Just see it week in, week out, week after week. You'll see some good activity. And the problem with new traders is that they keep coming in and they don't adapt, and they keep trying to hold to infinity and beyond with their trading. And it's like, well, yeah, okay. And if they catch one day, they think it's going to be the same tomorrow and the next day and the day after, and it's just not the way it works. And so it rings true that when something happens, Greg, I don't know what you're on about, mate. So when something happens, something good happens with their trading, they start making some money, and the markets are moving really well, like today. They're feeling quite pumped, and they'll think naively they can come in tomorrow and repeat the same, and it just doesn't happen. And then worst case is that they just end up giving it all back. And so that's why it rings true that they say you should maybe take the following day off. If you've made good money on one day, take the following day off, because it won't be the same. And it's just to calm you down a bit, because that's ego and greed that's taken over. No worries. Okay, we are done. We are done. Any more questions? We're done. Opposite end. Well, that's why we put in the 1-to-1 T1 and a T2. Yeah, Greg, as I know what you asked, mate. I don't know why you're asking that, to be fair. We're talking about trading. Good, yeah, I'm watching it. 17.95, good move on gold. Well done. If you guys have made money on gold, shorten it. That was the early play. It's been building up last few days. Excellent, you're done. Good, I'm done as well. Any final questions? Anything else? Yeah. Good. Well, take care, everyone. We'll catch you guys tomorrow. Yeah, Gregors, I know you did, mate. Good. I'm happy for you. If you seriously got nothing else better to do with your time, seriously, what's your point? We are here talking about work, and you're asking something that is completely off topic because you just want to get a rise out of people or whatever. Yeah. So you're that bored. That's okay. Whatever floats your boat, mate. Whatever turns you on. Each to their own. It's just so yeah. There you go. All right, guys. Take care.